Good afternoon, everyone, and welcome to our YouTube live presentation entitled Trending Thursday. Every Thursday at 2 p.m. on YouTube. Thank you guys for being here, and if you are here and you feel like it, please chat in. I love the interaction. My name is Glenn Tompkins. I'm a senior instructor here at VectorVest. Again, it's my pleasure to be here. Love these live presentations. And again, I love the interaction. So by all means, please chat in. And at some point in time during this webcast or during this live stream, got to get the terminology correct, I will be giving you an opportunity to type in your stocks. So even though this is Trending Thursday, looking at news, stocks that are in the news, looking at what's going on in the market, that is the layout of what we do on Trending Thursday. So we get a feel of what's really going on in the market every week. We get an idea of what stocks are making news, and from that, we go into the VectorVest software to analyze those stocks only the way the VectorVest can and get a real full picture. So the stocks will make the news. The VectorVest software will use it to analyze it. We'll look at graphs, let you know if it's okay to be in the stock or not to be in the stock. Or these could be opportunities to get in if the market's conditions are right. If you own any of these stocks based on the news, you can get a better understanding of what you need to do as an investor on those stocks. So let's see who's here. Ciborium is here. And keep in mind that unlike the presentations we do in VectorVest on GoToWebcast or GoToWebinar, the type that you see here can be seen by everybody. So actually you guys can all talk to each other as well. Andrew, I am not going to say your last name, so I might try it. Chechanowski? Cheskanowski. Did we say it right? Hopefully we did. Good afternoon, David. Good afternoon, Kerry. And good afternoon, Thomas. I bet you we did say the name right. I think it's Chechanowski. Chechanowski. Hopefully I said it right. Sitting to my side, sitting side saddle with me is Joey. Joey is my producer who helps me to look good on these presentations. And he doesn't have to do much work, you know, because
you do look nice today.
I do look nice today. I like this shirt. My wife just got this for my most recent anniversary. I tend to like this shirt, and that's what I'm wearing today. Sumad, good afternoon. Glad that you're here as well. So always remember, as far as this is concerned, hold that up. Always remember, like, subscribe, and share. All right, if you're not already a subscriber to our YouTube channel, please do that. Like it. And you know something? I am looking for comments on the videos as well. When we do these weekly videos, let me know what you like about them. So after the video is posted and it's up, chat in the box. Tell me, did you like the video? Did you not like the video? What would you like to see? So once the videos go up, I would really like to see your comments in regards to the videos because you guys have a voice. And if there's things that you would like to see, put them in. I put them in. Nathan, good afternoon. Paul, good afternoon. I know Apple is going to be a stock we're going to look at today, Paul, by the way. George, welcome. All right, so glad that people are chatting in. Again, I love the interaction. I feel naked without my rings. Joey makes me take my rings off because they're big, and I tap with them and all that kind of stuff. So, all right, did you say hi, Joey?
No, but hello.
There it is. No, say hi.
Hi, Joey.
There we go. And again, Joey is my producer. He sits to make sure everything looks good. Tom is here. You're up against Schwab Live this afternoon, and yet I'm here. Thank you for that, Badger. I appreciate that. Kerry says, I would like to see an exact prediction of what the market will do. Okay, I'm going to give you the prediction. You ready? The market's going to go up or the market's going to go down. That is my prediction live. Write it down. There's my prediction about what the market, that's an exact prediction of what I think the market is going to do. So, as I mentioned, write it down. You heard it here first on YouTube Live with VectorVest. So there you go. All right, Kerry? So there's the answer to your question. Again, for those of you who are new, Trending Thursday is all about what's in the market, what stocks are making news. And George says it won't stay neutral. Well, it could stay neutral, but primarily, even if the market overall stays neutral, every day the market will either go up or the market will go down. So there you go. That's the way I look at it. The overall market could be neutral, but Kerry's question is, I would like to see an exact prediction of what the market will do, and there you go. Kerry says, thanks for that. I'm going to be rich. Ta-da! There it is. There it is. This is a Glenn Stradamus is in the house. Wow. I like that. I like, Joey, write that down. Glenn Stradamus. All right. But keeping it real, we don't predict anything in the market. All right. That's the God's honest truth. We follow the trend of the market, and we keep you guys on the right side of the trend. And what you're going to get today is ideas of stocks that are making news and knowing what to do. All right. We're going to start off like we always do on Thursdays, is we're going to start off with looking at what's going on in the market. If you're new to the VectorVest software, this is what the homepage looks like. And from this homepage, you're going to gather a lot of great information on a daily basis to make decisions on the stocks that you own, or helping you make decisions on stocks that you want to either buy or sell, given what the market's conditions are. So when we start off looking at our home page, we have a market timing gauge at the top of the page. It's always on the home page. This is our daily traffic light into the market because it can change every day. It represents the three colors of a traffic light. Red means stop, yellow means caution or slow down, and green means go. And if you're in New York, you go really, really fast. I'm a New Yorker, so I tend to go really, really fast, even though I'm in North Carolina. We can see that the color guard as of right now, and I am looking at real-time data in the VectorVest software. The color guard right now is neutral, and we give you guidance. VectorVest does not advocate buying any stocks at this time. Why is that? Well, let's take a deeper look at our color guard. The color guard on the home page tracks three of our market timing indicators. Price, which is the price movement of our VectorVest composite. The VectorVest composite is an indexed arithmetic average of all of the stocks that we track, and currently we track 8,312 stocks. We use that VVC, or VectorVest composite, to time the market. And for those of you who don't believe in timing the market, again, we don't predict which way the market is going to go. We follow the trend of the market and keep you on the right side of the trend. So the price movement of that composite, both on a week-over-week and day-over-day basis. The RT, which is one of our core proprietary indicators. It stands for relative timing, and it looks at the short-term price trend of the market. This indicator will tell me if the market is in an uptrend or not. This indicator is cast on a scale between 0 and 2, where above 1 is favorable. Pretty simple, right? Below 1 is unfavorable. The higher above 1 it is, the faster in an uptrend the market is, and the more below 1 it is, the faster in a downtrend the market is. Currently, the RT, based on that scale of 0 to 2, is below 1, unfavorable, market's in a downtrend, and it's at 0.88 as of right now. The next indicator, the BSR, or buy to sell ratio. As I showed you all of the stocks that we track, every stock in our database of over 8,300 stocks does receive a buy, a sell, or a hold recommendation every single day. When we look at the buy to sell ratio, we're looking at the amount of buys divided by sells. So currently in the database, we have 471 buy recommendations, but 1,995 sell recommendations. That means stocks are falling enough to receive a sell recommendation in the software. If we have more sell recommendations than buys, the market is definitely showing signs of weakness. Now, something very important about this indicator. This is one of two indicators that will let us know when the market has looked or has found a bottom or is looking for a bottom. When the buy to sell ratio gets to a value of 0.20, the market is at a level where it's looking for a bottom. And guess what? With all of the fallation, that's a Glennism, with all of the fallation in the market, we are very close to starting to look for a bottom by way of that buy to sell ratio. Now, we take all three of these indicators, wrap it up into one indicator called the MTI, or market timing indicator. This is also cast on a scale between 0 and 2, where above 1 is favorable and below 1 is unfavorable. The MTI looks at the underlying trend of the market because it looks at the price, the RT, and the buy to sell ratio in this one indicator. So looking at the color guard, 6-day representation of all three of these indicators, what do we see? More red lights than yellow. How do you get a red light? You get a red light when the indicator has fallen on both the week-over-week and day-over-day basis. We get a yellow light when there's a mixture. rose on a week-over-week basis, fell on a day-over-day basis, or rose on a day-over-day basis and fell on a week-over-week basis. That's how we get yellow lights. So if we're looking at this like a traffic light, we have more red lights than yellow lights. This is not the time to buy stocks long in the market. What does this mean for the stocks that you currently own? Manage those positions. Allow the stops to manage those positions. And if you get stopped out, right now may not be the right time to be in or replacing those stocks. So from the home page, we get a nice feel of this is not the time to be buying stocks long. And if I own stocks, tighten stops on those stocks. Don't give away all the profit if you've got a gain in them. And if you have some stocks that are losers, don't allow them to be big losers. That is where we get caught up in allowing a stock to get away from us to the downside, all right? Gary says, if price RT and BSR all increase from the previous day, how can the MTI decline? Very good question. Keep in mind that these indicators are looking rising and falling on a day-over-day or week-over-week basis. The MTI looks back in time. It's a 50-day moving average of all three of these indicators, Gary. That is a great question, a question that we get a lot, and that is the explanation. These indicators can rise on a day-over-day, day-over-day, day-over-day basis, but the MTI can fall on a day-over-day basis because it's looking back further in time. Gary, does that make sense? Again, a good question, but that is the answer. This is looking back a little further in time than just day over day as these other indicators are, and it's also looking at all three indicators in one indicator. All right, hopefully that makes sense. All right, so now we got a feel of what the market looks like. Let's start to get into our news stories. So let me open this up real quick. Let's start off with what's really starting to push the market down, and a lot of stuff happened this week. Manufacturing plunge and reinforces the need for the Fed, for further Fed action. So let me explain to you what the Fed's job is. The Fed's job is to look at jobs, is to look at the economy, not the market, but the economy. And right now, globally, there's a recessionary feel in markets globally, where our market here in the United States is still doing well. But if the global market is getting close to recessionary and we are still doing well, what does that do for our dollar? It makes our dollar stronger. If our dollar is stronger, it causes people to spend more money to get our products, right? So keeping that in mind, the story talks about the need for the Fed, further Fed action. Keep in mind, what does the Fed do to help the economy? It either lowers or raises interest rates, right? When the market is doing well, they raise interest rates to make sure that inflation doesn't get out of hand. When the market is rampant, the market is going up, or price of goods are going up because more and more people, we're making money, we can spend more money and inflation will go up. But when inflation hits to a certain level, the Fed jumps in and says, all right, we don't want rampant inflation, so we're going to raise the interest rates to slow the economy down. Well, what has the Fed been doing recently? Lowering interest rates to keep the economy, and it's going to keep spurring on the economy so that we don't fall into the whole recessionary global idea. He says, thanks. Paul says it ignores Trump. Remember, in here, I don't talk about politics or religion unless it affects the market. And all it takes sometimes is a tweet from our president that can move the market on a dime. This is a very news-driven market. All right, good afternoon, Alessandra. I'm glad you're here as well. All right, so keeping that in mind, the drop in the headline ISM Manufacturing Index is a huge surprise. Last month, the ISM was significantly undershot relative to the regional manufacturing indicators. We think the Fed will provide further insurance, in quotes, interest rates cuts to try to limit the slowdown of the overall growth. So as Alessandra has typed in the room, she is from the Dallas User Group. I don't know how many other people are here from the Dallas User Group, but if you want to chat and say hello, all right, say hello. I say thank you to everyone who's here. So let's talk about the manufacturing report and how it affects the market. Let's go back into the software, and I am going to actually, I'm going to go into the software. Where's the software, Joey? Where's it at?
All those, whichever one you want.
All right, that one. We'll take that one. And I am going to go down, and I'm going to go into a graph. So let's go look at, actually I'm going to do it a different way. Let's go back into the viewers. All right, so the two indicators that I'm going to use to see what's, if that manufacturing report is affecting the market, two indicators. One, most people in here will use the SPY as a gauge of what the market is truly doing and if their portfolios are outperforming the spiders. So I'm going to put up the spiders. Because it's an ETF, the relative value and the relative safety on those, on that ETF is not going to show much of anything, but what's going to be important is the RT. RT looks at the short-term price trend of a stock. Above 1, the stock is in an uptrend. So currently the spiders are still in an uptrend above the value of 1. The CI of the spiders, which is the comfort index, is above 1. And the VST, or the total there it is. It still has a combination of above 1 as well. Karen says, hello, I'm here enjoying the program. Thank you for that, Karen. I appreciate that. I know, Joe, you didn't want me to do that. I keep forgetting about that, but that's okay. All right. So let's go graph the spiders. We'll right-click, view the stock graph. And here's the spiders. So the market overall, this is looking at the S&P 500. And we could see that it was, along with the VectorVest composite, as we'll show in a second, nicely rising, pulled back a little bit, found a level of a floor, a level of support, rose again, found a high, and right now it is approaching another level of support on the spiders, which looks at about, let's go right about here. A good level of support on the spiders is sitting at about, let's go make that a little darker, sitting at about 283.81. So a nice bounce today on the SPY. I have the 3 and the 8 exponential moving averages, a good way for a short-term investor or trader to get in and out of the market based on the SPY. All right, and look at that nice rebound today. Let's put this on a 3-month graph. Nice rebound today, piercing pattern. Let's go see if it's a bullish reversal coming off of this level of support in that zone. Beautiful level of support. Tom, you know this stuff really works. All right, this stuff really works. And let's go take a look at the VectorVest composite. All right, that's another indicator which looks at the over 8,300 stocks that we have. Let's take a look at that. Again, same kind of scenario. Earnings per share. How about the earnings per share on the composite is on the rise? All right, the 3 and the 8 did cross bearish, right at a level again of support. Let me go draw this line here. And on the VectorVest composite, the level of support is sitting at the price of about $45.96. Nice long wick at the bottom of today's candle. This is actually, looks a little bit like a bearish harami, just barely, as a nice open candle. Open candle, it's green because it's higher than the previous day's close. A lot of buying pressure with a long wick at the bottom of the body. Is it time to buy stocks yet? Not yet. One day does not make a trend. So the stock or the VectorVest composite is up today. The movement of over 8,300 stocks is up today, but not ready to still say it's okay to go full bore and buy stocks. Now, if this is a bearish harami, how do we know if it's confirmed? We have to look at tomorrow's activity to see if we still have continuing rise from this candle from today. So this is where we stand. The ISM report did pull the market down. Impeachment inquiry to the president did pull the market down. But now let's see if the market has enough blood in the streets coming off of this nice level of support to see if it can bounce and rebound once again. And that's right, Tom, this stuff really works. All right, let's get back to the next story. Oh, I should have done it this way. There we go. Along with this, oil. Oil extends losing streak on fears of excess supply. Inventories in the U.S. rose a larger than expected 3.1 million barrels in the last week, the EIA reports. When we have a lot of oil in supply, that means the demand is kind of low, which is going to make oil not so good as an investment. U.S. crude oil prices slid for the 7th consecutive session Wednesday, which was yesterday, hitting a nearly 2-month low after weekly inventory figures reignited worries about the supply gut. All right, so we have a lot of oil in supply, driving oil down because the demand is not nearly as high. When the demand is high, oil prices will go up because people are going to have to pay more for oil, right? So let's go take a look at oil in our graph. Let's close that out. Let's go take a look at oil. Please don't tell me I did. Oh, whew. Let's go take a look at oil in my group. And I'm going to use the USO, or the US Oil Fund ETF. Again, because it's an ETF, price and value will be the same. RV and RS will be the same as well. But look at the RT. The short-term price trend of oil is below the value of 1. Oil is in a downtrend as a whole. Let's right-click on the stock for USO, view the graph. Ta-da! Look at the movement of oil. So if I'm looking, I'm going to put this on a 3-month graph. If I'm investing in oil stocks, I need to be very wary of what's going on. Now, I do have a level of support on oil on the USO sitting at about the level of $10.49. So how do I get that level? What I'm looking for is the last level of a low and using that as a level of support. Look at oil quickly moving down to that level in that zone. Now, this is a red candle because it's lower than the previous day's close, but it's an open candle, which means oil today gapped down from the open this morning and then started rising up. I call this a bullish bearish candle. It's bearish because the price is currently lower than the previous day's close, but because it's open, it's risen since the open of the day. This could be a bullish signal, but not ready to pull the trigger on any new oil stocks just quite yet. I'm using fast moving averages, a 3 and an 8 exponential moving average, and I can get in at the right time. Let me go put on a date line. Was that a good opportunity to get in oil at least for a couple of days and then get out? Was that a good opportunity to get in oil? That went flat soon after. All right, but look at these opportunities to get out of the oil stocks when the 3 and the 8 cross. Would you rather get out when they cross or ride oil to the downside? And look at this, it stayed that way until it rose, and then it quickly went back down. And how about this? If you didn't have moving averages or any stops in place, you would have ridden an oil stock all the way down to here. That's not what you want to do, and that's why from a trading perspective, we look at moving averages such as a 3 and an 8 to get you in and out pretty quickly. So oil prices are sliding, oil stocks are feeling the effect. DWT, which is a contra ETF for oil, is doing very well. DRIP, which is a contra ETF for oil, is doing very well as well. But we can see that oil as a whole is falling, and that's because we have a lot of inventory right now. All right, let's go to the next story. In here, we're going to talk about, interesting, TD Ameritrade joins rivals in dropping commissions. So companies like TD Ameritrade, Schwab, Interactive Brokers are taking commissions off the table. Interesting because there was a broker out there for the past couple of years called Robinhood. Robinhood was a lower level broker that anybody could get into, especially if you were new to getting into the market and wanting to trade. It drew a lot of attention of those people. But how about Schwab? TD Ameritrade, Interactive Brokers are now dropping their commissions as well. TD Ameritrade just crossed the finish line in the race to zero. The online brokerage said Tuesday, a couple of days ago, it was cutting trading commissions to zero from $6.95 on options and U.S. and Canadian stocks and ETFs starting on Thursday today. Very interesting. So now all of these companies, all of these brokerages made money with commissions. Remember back in the days where it cost you $50 one way to get in and out of a trade? $100 round trip? Where did those days go? They now go bye-bye because even the big companies, I was wondering how long it was going to take for any of these companies to come in line with Robinhood, and now a big company by the name of Schwab or TD Ameritrade and Interactive Brokers are all dropping their commissions to zero. Let's take a look at them though, all right? Let's go back into the software. Let's take a look at Schwab. Start off with Schwab. The price of the stock is at $35.09. the value of what we feel the stock is currently worth is at 56.86. So currently below its value. It is an undervalued stock. Relative value, which looks at the stock's long-term price appreciation as compared to a AAA alternative investment in a AAA corporate bond. Above the value of 1, which means that this stock should outperform a AAA corporate bond by 46% over the next 1 to 3 years. Relative safety, which looks at the consistency and predictability of a company's financial performance. Will this company meet or exceed earnings expectations quarter over quarter, year over year? Above 1, the stock has a higher probability of meeting or exceeding earnings. And remember, earnings is the engine that drives the stock's price higher. What's hurting it now? Relative timing. The stock's RT, or short-term price trend of the stock, is below the value of 1. The stock is in a downtrend. So the stock is fundamentally sound, but moving down right now, and the stock is a sell recommendation. Now, something else I do like about it, the earnings growth rate is 16% a year. This company is not only financially sound or fundamentally sound, it is making money and growing their earnings at a clip of 16% a year. So this is a short-term pull to the downside, but fundamentally the stock is good. Let's take a look at Schwab. Right-click, look at the graph. Woo, Schwab is getting smoked after announcing the drop in the commissions. You would think that that would be a good thing, that the Schwab subscribers would be happy about it, but evidently not so much. Let's go draw a line of support on here. Let's go see if the current price can hold support. There's my level of support. Let's make that a little darker. There's my level of support. So we have a level of support sitting at $35.88. Remember I showed you that they were growing their earnings at 16% a year, but right now look at their earnings per share, and this is forecasted. Let's put this on a 3-month graph. Forecasted is falling a little bit, but still they're still in the positive, making money. But look at that gap down today, and not only is it falling, look at the volume behind it. People are interested in dropping this stock right now, but how about it does? Oh, it did drop below that level of support. Man, not only is it moving down, it did break through support. Where's my next level of support? That's a 6-month graph. I've got no real level of support. Right now, it's in uncharted territory over the last year with as low as it is. So this is something to keep your eye on. This could be a great buying opportunity, though, once the stock's price starts going up. That could be a good early move, but it's not ready to do that yet. All right, let's close out of that graph. Let's get in. Oh, another stock that's in that list was TD Ameritrade. Here it is, AMTD. This stock is clearly undervalued as well, so that's 2 brokerages, nicely undervalued. Solid relative value, solid, well, not as good as safety as far as Schwab is concerned, but still above the value of 1, but also getting hit right now with the story of dropping the commissions. Relative timing is telling me that the stock is in a further downtrend than Schwab. They are growing their earnings, though, at a clip of 22% a year. Fundamentally, both of these stocks are good. Right now is not the right time to be in them. And my last one is going to be with Schwab, Interactive Brokers. Fairly valued, 47.44 as compared to 48. Fairly valued, upside potential above 1, safety above 1 in a downtrend. But notice that Interactive Brokers has a stronger RT than the other 2. This could be more poised to move to the upside a little quicker than either Schwab or Ameritrade. Let's go look at its graph real quick. So the RT, look at that. So the RT is not taking the hit as much, but look at that. Look at that earnings per share, really, really falling. But look at today, it is moving up as compared to the other 2, which were moving down. Interactive Broker would be the first one that would start to move a little higher as far as the 3 brokers right now. Excuse me. Job says, actually, IAB started, Schwab jumped on the bandwagon, and TDA and E-Trade grabbed this streetcar as it ran by. But we are told commissions don't really amount to that much. If not that much, where does the major part of their profit come from? And that's another good question. With the brokers taking commissions off the table, where do they make their money? That's a very interesting question, of which I do not have the answer, Joff. I do not know. All right, I'm going to close out of that graph. Let's move to our next story. Oops. Hold on. There we go. Whew. All right, so we all know that GM is on strike, right? The UAW, the union for the GM, rejects the latest GM offer, makes a counter proposal. The United Auto Workers says that General Motors, which is down 3.7%, all right, comprehensive offer made late yesterday to end the 2-week strike is not acceptable. So I'm hearing a lot of the GM companies or factories maybe laying off people, which is affecting the secondary customers and the tertiary customers who depend on companies like GM in order to make money, right? The union vice president, Terry Ditz, I'll say that, said in a letter to members there are many important issues that remain unresolved and that the union has responded with a counter proposal. The strike has cost GM over $1 billion so far. So you would think that GM should be at the table trying to make a deal quick because that's a lot of money. JP Morgan analyst Ryan Berkman estimates. Let's go take a look at what's going on, how that has affected the GM, how the strike has affected the GM stock. So here's General Motors, nicely undervalued. The price is at $34.82. Value is at $44.76. Fundamentally, relative value, good number. This stock should outperform a AAA corporate bond by 23% over the next 1 to 3 years. But look at that. Relative safety, which is also an indicator of risk, is below the value of 1. GM right now is more of a risky stock, but it's been around for quite some time, right? It's been around for a long time. Relative timing below 1, stock's in a downtrend. Stock is a sell. The earnings per share is $6.34. They are growing their earnings at a clip of 8% a year, and the stock is a sell recommendation. Let's right click, view the stock graph. Let's take a look at GM, and with the strike being in play, remember I told you that this was a fundamentally good stock, it's been around a long time. Look at the earnings per share. Earnings per share tells me that they are still overall a good company, that the strike is affecting the stock adversely. So now let's go see when it's a good opportunity to buy. How about right now? GM is trading at a new level of a low. Let's put this on a 6-month graph. There's my level, my last swing low right about here. That's going to serve as my level of support. It's going to serve as my level of support. We've got some room to get down to 33.12. All right, that is a 6-month low. The stock's price over the last 6 months actually creeping up, hitting a new high here, pulling back. But look at this now from that high. Lower high, still moving lower. Overall, GM is in a downtrend, and this was prior to the strike, right? But with the strike, the stock's price is pulling back, but maybe we're going to start to see an opportunity to get in. Not quite yet, though. One day doesn't make a trend. Nice up day today. Very little wick at the top, but still, look at the 3 and the 8 exponential moving averages. The stock is still in a downtrend. I do love the earnings, though. What I'm looking for is right now, while the blood is in the streets, not enough blood yet before the stock is able to start to move up and look for a better buying opportunity, but the earnings still does look good. Mendy says, could you check XOM? And Mendy, I'm going to give you an opportunity to look at stocks. Give me about 10 minutes. I will look at you guys' individual stocks. Today, I'm drinking my coffee. I sent my daughter to Regent University. I am a Regent dad, and that is my cup that I'm drinking out of today, and Cafe Bustelo, the official coffee of YouTube Live. All right, or Trending Thursday. So GM, not a good opportunity to buy. The stock just recently got to be a sell recommendation. I would wait. The news is corroborating by the VectorVest software. It's not the right time to buy GM yet. All right, let's go to the next story. Next story is Chipotle. You know something? Chipotle is such an expensive stock to make burritos. Would you agree with that?
Yes, sir.
It makes great burritos. It does. But the stock is trading at over $800. Things that make you go, All right. Chipotle's new steak could boost second half sales, analyst says. So you're talking about new steak in Chipotle, but wait a minute. We're looking at all this Beyond Meat and all that stuff, all the meatless stuff that's taking off. Chipotle saying, forget that. We're not going with that Beyond Meat stuff. we're going to boost our steak. So think about that. Chipotle Mexican Grill's latest menu addition could help the restaurant chain to higher than expected results to close the year, an analyst wrote recently. That didn't help Chipotle's stock ticker, which is CMG Wednesday, which was yesterday. The shares were down almost 2.5%, as the S&P was off almost 2%. But SunTrust, Robinson's, Humphreys, Jake Bartlett, that's a lot of name. Robinson, Humphreys, Jake Bartlett. You know, I'm going to make my own new name. I'm going to call myself Glenn Edward Robert Joseph Tompkins. I like that. All right, I'm going to change my name and put it all like that. All right, let's go take a look at the stock. We'll get back into the software. We'll go to Chipotle, which is CMG. There it is. All right, this stock is clearly way overvalued. Now, because the stock is overvalued, does it make it a bad stock? Chat it up in the room. Because the stock is overvalued, does it make it a bad stock? Yes or no? I'm going to give you about 5 seconds, 4 seconds, 3 seconds, 2 seconds, 1 second. Nobody typed in whether that was a good thing or bad thing. So, I'll answer the question. Because the stock is an overvalued stock does not make it a bad stock. It just means that people are willing to pay a premium to own the stock. Now, Andre said sometimes. All right, so Andre, let me back you up on that, because sometimes could be a good answer. So when we look at a stock that's overvalued, we want to see if it's something called a glamour stock. We have an indicator. If the stock is overvalued, we look at relative value. Remember, relative value looks at the stock's long-term price appreciation potential. So even though Chipotle is clearly overvalued, the relative value is above the value of 1, which tells me that the stock has got good upside potential as compared to a AAA corporate bond. This stock meets the characteristics to be declared a glamour stock. Another thing, relative safety is at 1.41. This stock has a very high probability of meeting or exceeding its earnings expectations. And remember, if earnings is an engine that drives the stock's price higher, good earnings, sort of like on what's on Chipotle, attracts people to buy the stock. Now, CI, as someone just mentioned, is high, which tells me that this stock has the ability to withstand long and lengthy price declines. So when the stock does go down, it's resilient enough to go down and reverse and come back up, taking out the previous high. So there's a lot of good things about this stock. They grow their earnings at a clip of 22% a year. Earnings per share is over 15 bucks. RT is above 1. Everything is telling me that overall, this is not a bad stock. And looking at this watch list of stocks that I created, it is the stock that has the highest value, safety, and timing indicator at 1.2. So out of the combination of value, safety, and timing, this stock rates the best in this list. Let's go take a look at the graph. So the new steak, could that help it? Look at that equity curve. You can't beat that. So altogether, I am of the mindset that when a stock is overvalued, it doesn't make it a bad stock. But if you have the VectorVest software, you can determine whether you're going to be a sheep or a shepherd. As a shepherd, you lead the flock. As a sheep, you follow the shepherd. This stock is clearly overvalued, but with a relative value above the value of 1, this stock is more of a leader. You're more of a leader than you are a shepherd. The stock has been moving up. Right now, this definitely moving sideways. Love the earnings per share. Love the earnings per share. And because the stock is moving sideways, the moving averages won't serve as nearly a good indicator than something like stochastics, which will show you if the stock is overbought or oversold. All right, so just checking the chat. I've been using InnoVestor software, really easy to use. What are you guys' thoughts? I don't know anything about InnoVestor, the software. All I'm asking is if you see things that you like within the VectorVest software, Oliver, I'm only going to say is we invite you to take a trial. I will not talk about a software that I know nothing about because I know nothing about it. So there you go. That's my honest answer to your question. All right, let's go take that off. Let's move to the next story. We're almost done. And next one, it says why Apple 5G phones might not be worth the wait. Very interesting. Everybody in here knows that I am an Apple lover. I love Apple. So does Joey, right, Joey?
That's right.
Yeah, you didn't say that loud enough.
I like Apple's products.
There you go. He's very robotic. I'm trying to keep him from being so robotic. All right, for months now, Apple analysts have opined. You know who used to use that word a lot? Bill O'Reilly, opined. All right, analysts have opined that the iPhone 11 cycle would be an off year and that many customers would hold off on upgrades to wait for the expected fall 2020 introduction of the first 5G iPhones, and the narrative could still play out that way. But what if 5G is a bust? So let's go take a look at Apple. Let's go take a look at Apple. We'll go back into the software. Apple is the second best stock in here by way, oops, not of VST, it was. It's now the third best stock in here by way of VST. The stock is undervalued, trading at 220, value at 245. Remember, value is what we feel the stock is currently worth, looking at things like earnings, and our earnings is forecasted 12 months out, and looking at earnings growth rate, okay? Remember, earnings is the engine that drives the stock's price higher. Apple has got an RV at 1.01, pretty flat. So I would have a toss-up between buying Apple as compared to that AAA corporate bond over the next 1 to 3 years. Relative safety, though, is above the value of 1. Higher probability that when earnings comes out, Apple will meet or exceed earnings. And RT is at 1.26. This is one of the few stocks that are in this watch list that are moving up, and the stock is a buy recommendation. Now, they are only growing their earnings by 1% a year. Very interesting that the phone and tablet market is becoming so competitive. Now, Apple still holds a good share of it, but Galaxy, I believe it's Galaxy, still has a lot more share of the phone market and probably the tablet market. The people that are still buying the Apple products and willing to spend as much money as they are on Apple happen to be the hardcore Apple geeks, such as myself. Here is my iPad. Here is my iPhone. I've got another iPhone. I've got another iPad. I am one of those. Oh, my watch. My watch is an iWatch. So I am one of those diehard Apple geeks who will never turn from Apple. But Apple still overall is a decent, good company. What is catching my attention, though, is that earnings growth. They are not growing their earnings as fast as other companies. Remember the time where Apple was the king of the hill? And they were growing their earnings. And right now, Apple still has the most money as a company still sitting on the sidelines. All right? And right now, they're still trying to be the first $1 trillion company. Let me see, where's my market cap? Look at that. It's almost at the 1 trillion mark. The market cap on Apple is, they're right now that close. 9,949,000,000, I don't know how to read that number. Anyway. They're trying to get to the market cap of 1 trillion, and they are the closest there. They are the closest there. All right, so man, oh man, overall a good company. Just struggling on some times right now. Let's right-click, view the stock graph. All right, there it is. There's Apple. Let me maximize it. Look at that equity curve, put it over the last 3 months, and this is what, look at that. The earnings per share, which is our forecasted earnings, is falling down. Let's put it on a 6-month graph. Nice upward move, but earnings consistently starting to fall. Very interesting. The stock just turned down yesterday. Nice rebound today. Is it ready to buy Apple yet? Close. Now I'm waiting for the 3 and the 8 to cross, and I'm looking to see if Apple can take out that most recent high before I pull the trigger on it. All right, volume has been pretty steady. Volume has been pretty steady, all right? So Joff says, no, if premium profitable can be a good deal. If you're talking about trading options on it, I'm not sure what you're saying, Joff. All right, but I'm not ready to pull the trigger on Apple, but I do like the trend of Apple. All I'm waiting for is a good buying opportunity. Keep in mind, though, if the market overall is moving down, the trend of the market affects 80% of the stocks that are in the market. So just keep that in mind. All right, so I am looking for a good opportunity when the market's conditions are right for it. I believe we have one more story. One more story, and there it is, Tesla. Tesla is down 5% after Q3 deliveries fall short of 100,000. So Tesla says it achieved record production of 96,155 vehicles in Q3 and record deliveries of about 97,000 vehicles. The deliveries count consistent with 17,000 SX car, S and X cars, 70 blah, 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 blah. Tesla is saying it's entering Q4 with an increase in its order backlog. So a lot of people want to get into Teslas. I live in Mooresville, North Carolina. I got a lot of people driving around in Teslas. I got a lot of people running around in Teslas. So we'll keep our eyes on that. Let's go take a look at the stock, which is Tesla. All right, right now the stock, again, is overvalued. This is another overvalued company, but look at that relative value. The stock has got good upside potential, relative safety above 1. What's hurting it right now is RT is below 1. Tesla is in a downtrend. The combination of relative value, relative safety, and relative timing makes it the second best stock by VST in the list. Look at that. Earnings growth rate, 50. They're growing their earnings by 50% a year. Woo! Man, that's huge. That is like big time huge. Let's go take a look at the graph. Right click, view the stock graph. And yeah, look at that. Tesla was in a downtrend back here. It overcame that. Right now we're doing a lot more of a sideways mambo. Let's go to 3 months. A little bit of a sideways channel. The 3 and the 8 crossed today. Look how big Tesla dropped. Look at that gap down. But now from that gap down, the price has rebounded, moving higher than the open, which was right here at the bottom of the candle. But definitely a bearish time to be in Tesla. Probably wouldn't pull the trigger on it now. And not only that, over the last 3 months, we have a high sitting here back up in July 24th. Man, I'd really like to see if we can take out. Look at that. Nicely moved up before it moved sideways. Wouldn't touch Tesla just quite right now. Now, I see stocks coming in. And again, Oliver, I'm not going to talk much about that tool. I don't know it. I don't know it. What are your thoughts on EV? I don't know what the EVA model is. So I'm going to leave that question alone. This is not the time or the place that I can address that software, my friend. All right. Now, you guys are putting in stocks for me to take a look at. All of the stocks that we talked about, I did put them into a list. And every week I do put them into a Trending Thursday list. And this week is no different. And here's all of the other lists that we've had in place. So now I'm going to go to the graphs tab. I'm going to put in some of the stocks that you want me to look at. One of them, Mendy gave me one. What was that? XOM, comma, XPEL, comma, SAIA. Any other stocks? This is an opportunity for you to take a look at them. And George says Microsoft is the first $1 trillion company. Is it really, George? I wasn't sure of that. All right, so Apple would be the second one. I didn't know that. Thank you for that, George. And I always like when people hold me accountable, big time. I always am on board with that. Nike, MKE, any other stocks? We still got some time, so put your stocks in. Hurry, hurry, hurry. Hurry, hurry. Say again, someone said Arby's? Uber, comma, NVIDIA, comma, I don't see the 50% earnings. Remember, our earnings is forecasted, and that is a forecast if they're growing their earnings at a clip of 50%. I'm going to double check that, Devin. I will. Turbine, Digital Turbine, APPS, IPL, comma, IPL. I don't have that, Oliver. Either check the symbol or it may be a stock that we don't track. AMWG, comma, I don't track that one either. Gene, sorry. Comma, let's go. I already have XPEL in there. CGC, a weed stock, comma, ENPH, comma, go easy. On what? On what stock? I'm not understanding what you're saying, Oliver. All right. Anyway, what is that? Best Buy, BBY, comma. All right. And I think that's all. One more. GSY. Is that? There we go. Gotcha. All right. And that's going to be my last stock. No, Tesla missed Musk's production target last month. But they still put out a lot of cars, Tom. They still put out a lot of cars. All right. I'm going to look at all of these on a 3-month graph. I'll make it real quick. All right, so looking at XOM, this was Mandy Andre says, could you have some ETF in your list? I could have had an ETF. Let's see if I can get through these first, Andre, and if I can, I will look at whatever ETF you want to take a look at. All right, let me get through these first. So ExxonMobil, remember we talked about oil was being affected because we had so much supply of it? Well, ExxonMobil is in the petroleum field. Look at the earnings falling, look at the stock's price hitting lower highs over the last 3 months. Now, a little bit of a rebound today. The 3 and the 8 still haven't crossed positive yet. And this is the fastest indicator that we use as a means to getting in or out of a stock. If I'm already in a stock and I like to see when it's the right time to get out of it as a swing trade, I will use a 20 exponential moving average. But for the purposes of trying to get in and out of a stock, I'm going to stick with the 3 and the 8 exponential moving average, all right? Right now, the stock, though, I do like that ExxonMobil is hitting a level of support. Am I ready to buy it yet? No. All right, Mandy, do you own the stock? Let's do that. Style, do you own the stock? And if you do, what I'm going to always tell you is a good way to get out of a stock at a fast rate. I'll look at that 3 and the 8 moving average. I'd rather have you out when the 3 and the 8 cross bearish right here. I'd rather have you out here than riding the stock down and praying and waiting for it. All right, so as now, even though you may or may not be a VectorVest subscriber, looking at a graph will help you to manage a stock, mitigate your losses so that you're not riding it down. Now, for you, what it's good is that it is bouncing off a level of support. Will it be able to overcome at least this last level of a high? Hopefully. But what will help you is when looking at the 3 and the 8, if the 3 and the 8 start to cross up, that's a good bullish feeling. All right, right now, I'm with you. I'm hoping that the stock price will go up, but using something like VectorVest, looking to see when the stock gets to be a sell. Look at the 3 and the 8. How about getting out back here at 716 rather than riding the stock's price all the way down here? Currently, getting out at the level of $71.14 instead of riding it down to $67. All right, what are those moving averages I'm using? I'm using a 3 and an 8 exponential moving average. All right, that was way back about Chipotle being overvalued. Oh, okay, I got you. All right, let's go to the next stock that you gave me. Let's try that. XPEL, I liked that stock when it was rocking and rolling. Right now, the stock is moving a little bit sideways. Let me show you, and actually I'm going to use support and resistance. Let me show you where the support and resistance lie. There's my level of resistance. Let me see if I can change these. Change the style. I'm going to put support as red, and I'm going to put resistance as green so they stand out a little bit more. And I'm going to change the settings on them real quick. Change the settings to 100 bars. Boom. All right, there we go. So here's my level of resistance sitting at the price of $12.27. I've got a big level of support sitting at 601. I'm going to draw another level of support sitting right about here. Good bodies at about $9.94. Let's go make that a little darker. That's a more closer level of support sitting at $9.94, but by way of the support and resistance, it gives you all the way down here. That's a good level to say when it's time to get out of the stock, and especially because the stock is starting to move sideways. All right, let's go to the next. What else I like about XPEL is the rising earnings. I would like to see more volume, but that makes sense as it's leveling out because the stock's price is in a little bit of a channel. All right, George, Google first $1 trillion company, says Whitney. So I got now Google and Microsoft. I need to look into that. I need to look at that. I really need to look into that. So Google and Microsoft. All right. Let's go to the next stock you gave me, SIA. I like that. In my hot stock picking panel that we had, this was my pick. I love the earnings per share, and it's in one of the best industries in our database. Right now, pulling back a little bit. Look at that little bit of rebound right at that level of resistance. So if I'm not in it yet, I'd wait for the 3 and the 8 to cross or let it break above that level of the high before I pull the trigger. Beautiful looking equity curve. If I didn't get out of it, let me give you a line in the sand, which would have been right about yesterday's low. It would have been at yesterday's low. If it crosses below that level, that's probably a good opportunity to take your money off the table. And that's at 89.62. But look at where it stopped. There you go, Tom. Type it in the room. Look at that. Bounce right off of support. Right off of support and starting to move higher. A good level of support covering back here, which also served as a good level of resistance. Look at that. That is a beautiful level that is bouncing off now. Beautiful up candle. Let's see, though, if we can take out that level of the high. Do like the rising earnings. All right, next stock, Nike. Nike was moving higher, was in a little bit of a channel twice over the last 3 months. It was in a channel here, broke to the downside of the channel. Was in a channel here, broke to the upside of the channel. And right now, the 3 and the 8 are still bullish. Nice up day today. The 3 and the 8 are still bullish. The stock is still a buy recommendation. If I own it and I'm in it, leave it alone. If I own it and I'm in it, leave it alone. But I am going to maybe test this level of support, current support, which is sitting at 89.61. Let's see if that level can hold. If it breaks below that level, you have to think about taking some of that off the table. George says, can you show how to scan for 3 and 8 day crossover? You need to have a pro trader in the software to be able to do that. Depends on how much time I got. I may be able to do it, or I may actually make a presentation specifically about the 3 and the 8. How about that, George? I may think about doing that, all right? Let's go to the next stock you gave me. Uber is falling down. Down, 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 down. Don't be doobie down. Whoa, 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 whoa. Did that look creepy on the screen? Did that look creepy? I don't want to look creepy. Anyway, Uber's falling. Stock has been a sell for a lot of this 3-month look-back period. Earnings is low. Man, I'm not feeling Uber. Even though it may be bouncing off a level of support, I'm not feeling Uber right now. Even if it jumps back up into this level of a channel, what does that mean? Do I want to buy it? Now, if I'm a trader, I could buy the breakthrough of this now level of resistance and trade it up to that level of support. So could I hold this stock for a couple of few days if it gets back into the channel and rides back up? The answer to that is yes. All right, as a long-term investor of it, I'd be playing it more so to the downside than to the upside. All right, who gave me Uber and are you trading it? Who gave me Uber? I'm checking. I don't know who gave me Uber. Huh?
Sumaid Khan?
All right, Sumaid did. Yeah, hopefully you're not holding this long-term. Hopefully you're not holding this long-term because the stock is definitely moving down. All right, so just keep that in mind. Even if it does bounce up here and gets back into this channel, who's to say that it won't stay in the channel? Just keep your eye on it. And at some point in time, folks, when the stock's going down, you have to make sure that you limit your losses. Don't ever ride a stock's price down. Not this much. No matter what moving averages, no matter what stops you're using, you got to have a plan to get out of the stock. All right? I'm not ready to pull the trigger on it yet, even off of this bounce of support, because again, if it jumps back into this channel, who's to say that that level of resistance sitting at 34.95 won't stop it and move it back down again, all right? Just keep that in mind. NVIDIA, moving sideways, definitely moving sideways. Watch the earnings per share over the last 3 months pulling down, but definitely the stock's moving sideways. Nice up day today, the 3 and the 8 have crossed. Let's see, with that movement, can we get a move to take out the 3-month high? And if that is the case, we have some upside to it. But who's to say that once it gets to that level of resistance that it doesn't pull back down? All right, just keeping that in mind. George says, yes, Google was the first, but now is taking a back seat to Apple and Microsoft now. Total, okay, I got you. Thank you for keeping me up on board with that. There you go. All right. So NVIDIA, I would wait until to see if we can at least take out that level of the high, or we're going to bounce off of that level of resistance and come back down again and stay in the channel that we're currently in. Let's move to the next one. I love this stock when it was rocking and rolling, but since then it's pulled back. Right now sitting in another channel, a level of support, and look at where it fell and bounced off, right at that level of support at 608. Look at that nice rebound today. The 3 and the 8 are still bearish though. If I were to look to get back into it, let's go see and make sure that the 3 and the 8 cross, and if we could take out this level of the high of $7.83. All right, keep that in mind. So if I'm in it, man, especially if I was in it when it was making money, I would hate to see you have given it all back. How about the 3 and the 8 crossed here on 9.9? Would you rather get out there or get out here? Now, if you're still holding it and it's now bouncing off support, might as well leave it alone. And let's see if it has the wherewithal to go back up again. I do like the earnings on it, though, rising. Next one, a weed stock. Very, what's the word I'm looking for? Speculative play. All right, look at that. CGC definitely pulling down. Earnings are negative. Earnings are negative, but getting less negativer. All right, but definitely negative earnings. A good 2 days up. The 3 and the 8 haven't crossed. And if you decide to play the 3 and the 8 on Canopy or any of the weed stocks, notice that you have a short opportunity to make money and then get back out. Overall, look at the trend of the stock over the last 3 months. Definitely moving down. Profit Locker got me out of APPS at the right time. And that is I'll do a presentation on stops as well. I will do a presentation on stops as well. Write that down for me for a second. That's a good presentation to do on different types of stops. All right, EMPH. Beautiful. I'm going to put this on a 1-year graph. Look at that run-up of EMPH. Beautiful. Somebody on TV, I won't mention any names, said, you should sell it. And they did. And look at that. But the earnings of EMPH still look great. I'm trying to see if the stock has the wherewithal to start moving back up. This stock was a beautiful looking equity curve, beautiful looking rising earnings, still rising earnings even as the stock's price is falling. They are doing the right things. This is a good business that got affected by someone saying, go sell the stock. Well, if I still own it, let me show you something. I do have a level of support sitting right about here. There you go, Tom. Again, this stuff really works. Now, how do I find that? I'm looking. Where's my last level of the market or the stock going down? Right here. Where's the last level of the stock showing a resistance? Right here. That's a beautiful level at 2120. If you're still owning it right now, it's bouncing off of that level of support. The 3 and the 8 haven't crossed yet. Earnings looks good. All right, I'd really like to see the 3-8 run up. And once that happens, that may be a good buying opportunity. And guess what? You got a nice buying opportunity, at least up to this level of the high, which is sitting at 35.42. You've got opportunity to make money on the stock. It's serving or bouncing off a level of support, which is a good thing. Let's see if the 3 and the 8 can cross. That might be a great opportunity to make some money on ENPH at the right time. I think you should keep Trending Thursday for giving us news and reading articles. I like that. Otherwise, it's the same stuff we watch in VectorVest. Well, it's not the same. It's different. Isn't it different? I think it's different. All right. So there's a bounce. Not ready to buy it yet. Let's get some more confirmation. Best Buy. Doing what? Definitely, I can see that moving in a channel. Do love the earnings per share. Moving in a channel right now. Nice update. Not a full piercing pattern, but nice update. The 3 and the 8 moving sideways as the stock is moving sideways. I'd like to see the 3-8 cross and break above this level of 69.70 if I'm not in it. And once it goes above that level of 69.70, I can ride this up to about 77 bucks, which is the 3-month high. All right, let's go to the next. This is the last stock. Wow. Here's an ETF, Invesco Ultra Short on fixed income. I don't know who would be trading this. It's in a big channel. This is a big channel between a level of resistance at 50.47 and a level of support. It looks big, but it's very small dollar-wise. I don't think that there's anything to see here as far as investing in this. I don't know who would want, what's it, 50, 47, 36, 37, 38, 39, 40, 41, 42, 43, 44, 45, 46, 11 cents. That's all that move for an 11 cents. Look at all of these candles for an 11-cent move. Monthly dividend maybe? What's the dividends? Does it pay a monthly dividend? I don't know that. Does it pay a monthly dividend? Let's go to dividend analysis, dividend paid. I got $1.37, which is annualized. I would have to divide that by 4 to tell me what it pays quarterly. I'm not really feeling that stock. An 11-cent move for all of this move, I don't know. I think there's a lot of other stocks out there to take advantage of. And $1.37, again, that's annualized out. How much? 30 cents. 30 cents. So there it goes. 3, 4, 3, 6, 9, 12, about 35 cents, 70. It's about 34 cents a quarter. Yeah, I'm not feeling that. I'm really not on. How about SPY? We already looked at SPY, Gene. It was in my viewers. That was one of the first stocks that we did look at, along with the VectorVest composite. The SPY, which looks at the overall market or the top 500 stocks in the market, whereas the VectorVest composite, which looks at over 8,300 stocks. Right now, it is, put this on a 3-month graph. We've got a nice piercing pattern with today's activity, but look at over the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. It's gone down 8 out of the 11 days. Nice rebound today, bouncing off a level of support. Bouncing off a level of support, sitting at about 283.30, probably even less than that. So am I ready to say the market's ready to move back up by way of the S&P? No, not yet. That one day doesn't make a trend. One day doesn't make a trend. All right. It was the ETF. You pulled up the wrong ticker. It was GSY. GSY. Let me go look at GSY. Let me go back to graphs. I'm going to add new. GSY. Go. No, it's so there. So go easy. Let's go see if I can find a ticker symbol. Go easy. Oops. Go.
That innovation thing that he was talking about is from Canada, so he's probably from Canada, so it's probably a Canadian.
Okay. So go easy. I don't have that. Oh, it's on the TSX. I'm in the U.S. market. That is why I can't find it. I'm in the U.S. market. I'm not in the Canadian market. But everything that I'm doing here and showing you how to analyze a stock, you can do in the Canadian market. Right now, we're only looking at the U.S. market, but you can open up your Canadian database and do the same analysis by looking at things like our indicators, RV, RS, RT, VST, the recommendations, analyze the stocks in Canada, and then look at their graphs to make it so you can do the same exact thing. All right, so I'm a little over, but we did a good wrap up of what's going on in the market. We looked at the stocks that were making news. We took those and analyzed them in the VectorVest software to get a better feel of what's really happening either fundamentally or by way of technicals, with RT, looking at the earnings and how well they're growing their earnings and things of that nature. And then we looked at the graphs. So we looked at the stocks that were making news, and then we took your stocks that you want to look at, and we then put them into a graph to take a look. So hopefully you got some insight if you're holding some of these stocks on what to do. If they're doing well, you're great. If they're not doing well, at least I hopefully pointed out ideas to use the next time stocks exhibit certain characteristics of possibly the 3 and the 8 or falling below a 20-day exponential moving average or whatever stops you're using. No matter what stocks you're in, you have to have a plan to get out. Without a plan to get out, you're setting yourself up for failure because you will get caught out there in writing a stock down that you don't need to. So with that, folks, I'm done. Hopefully you enjoyed it. Like it, share it. What's the other one? Subscribe. But not only that, in the videos that we make for Trending Thursday, I am definitely inviting you to comment on those videos on our YouTube page. Tell me if you like it. Tell me if you don't like it. Tell me if you think I suck. But most of all, tell me what you would like to see because you guys have a voice. I am trying to grow our footprint in YouTube. You guys are going to help me do that. So when the video is ready, please comment on the video. All right, please do. And please do. I want to see as many comments as you guys are willing to do because that lets me know that you're either learning or maybe I'm moving too fast. Tell me that. If you feel I'm moving too fast or maybe I'm just talking too much, tell me that. I want your feedback. So please respond to some of those videos that you see, especially the Trending Thursday. All right, folks, thank you all for being here. It's my pleasure. Adios, arrivederci, ciao, au revoir, sayonara, later.